Mhm. Yeah, everything is recorded. Well, I wasn't coming either, to be honest. I really don't feel bad, but given this no homework.
And I didn't feel last time, so before it's on. If I do the phone, I guess. You could be.
Right. I understand why we got who choose to. 'Cause I don't know if you remember the first two classes that was we look like we was sitting there. I haven't seen people on it online. Right, right. So why? Ask a question. Why is some people got preference and we can? I do a lot of classes with them when they online.
Meaning you want without a preference.
Without a classes, I'm doing HR just finished last week. I'm doing business banking law online tomorrow or Tuesdays with them on economics on that.
What program are you doing?
Associate's program.
Okay.
And I do a couple of certifications for trust and all.
Meaning like no offshore banking stuff.
Gosh,
What? So what all you take? I mean, what all courses you would? I mean, from you doing it.
from what I know that, the hardest class I have is this one from that. And the reason why that's the one thing I don't feel the explain and go through it. Where like how the others they making sure before the class out, you know what they say. But this to me it feel like he give you the example, he say two things and then homework. Or read this and do this. Throw off with this.
So you think we should do like examples and then
examples from examples, and go through the examples of how you get it, and then we be there. But don't use an example from because what I know from what I knew from this. Most of the questions, most of the examples they have in there, structured from chapter 2.
It going back.
They're going
you
so
gotta keep
far
going
back. You see what I'm saying? So when you read it, I going back in pages, you're going way back to almost the first chapter to find out where this trial balance comes from. And it's crazy. That's why I feel you should have examples over examples just to keep you going. Not just going from my own 160 and I write this. Okay, you understand this? That's where they're supposed to go. Go. That don't make no sense to me.
So you say you're doing the trust.
Yeah, I know the trust.
What's it called?
Trust.
That's it? Okay.
Right. System work or micro whatever the name of rest. And she got started as a first year, she can make $60,000. Just start.
When you guys, like, when you
Last year, it's her first year. She started on a contract and they just made it this year permanent and started off with $60,000 a year. Yes. Right before you reach, like the key, right before around the book, huh? Down there. Yeah.
Wow. Like, she started looking at, she was wondering,
She went here. Went here. I'm taking the same courses, what I taking, she, like I said, she started on contract, and then they made them permanent in last year, January or, no, last year. I don't, just a year, and then she done me, she didn't know, she made, after she done me, she made $60 a year.
wow.
I don't know, I had the list with me, I don't know.
Oh,
And I read the book.
I think I know. Okay. Don't laugh, but I read your part of the time, what you read already.
Well,
Your name.
I don't know, love to skip. Rest of it is pretty cool. Yeah. No, they have one, but that's without. That's what it's for. But it's the cost for it. On top of it. Well, I know right now.
Administration. They all the plus stuff.
Oh, fine, see. Well, money, only money for me in the finance, cross company offshore.
Good evening. Yeah.
We need the trust, we need the certificate again. Okay, what you want, without that, yeah. Exactly. I didn't take it Saturday. Thursday and Saturday. Online. Hard to read. Laws between different countries, the different dollars, the word of the dollars and stuff. Yeah, and yeah, look at that. And also, whereas I remember my sister, she worked for also what she started with. I was thinking about where stuff, Deltec.
Oh, there's anyone.
$60 a year.
Right, is it right?
But I know, like, if she started off on contract, and she just got, last year, at the end of this time, right now, she got full time. When they made a full time, the sign, went to $60. Starting. Yeah, for these last ones, government needs to pay, banks and stuff to pay for these courses. I pay for it, I don't know where. Right, almost $2,000 for the classes I do. Wow, this here going. Let me know because as soon as I leave here, I have to go on Google and YouTube, but whatever to fill me in for what I miss. And that's how I do it. This class, yeah. To me, it ain't informative, it ain't breaking everything down how I did it. You saying the same thing? Not talking example.
Just example,
Right.
let us do it.
I'm thinking we can do it.
And let's do it together. Let's see exactly what we went wrong. We
Mhm.
just.
We're looking at law.
Well, the thing is, the thing about, the examples, when we see them.
Mhm.
You cannot follow them based on the trust and then
Mhm.
just follow the rest.
Ah, that's true, but they only do it. Just getting it, and they keep moving things. But I don't know. I was off the adjust, and I started the thing, I was on the. Yeah, but no, I started a bunch of. I didn't put. I didn't go in the car. Yeah, hopefully. I know what he said, he just, easy. Oh, it's the same word. Well, then we had this was, we tried the jump. Like I say, I brought this to close of that. Worksheet, I stopped on the income statement, that's where I stopped. That was easy. Try about it. Worksheet. Right, I didn't know what to do it, like you said, I put it there, I didn't know what to do it.
Mr. Wilkinson. Hello.
Hello,
Wilkinson. Hello.
Hello. Hello.
Hi.
Hi, he's not here as
Mr.
yet.
Wilkinson.
Yeah, he's
Oh,
no, he's not here.
festival. What's going on?
Yeah.
Question. You think we have in regular class or we gonna do review tonight? You only one left to review.
Yes,
would
I'm
be
with review, but then he might want to go on to something new because I was asking for a review from last week. I think I think we need more practice. Oh, I think. Okay, he's here. He's here.
Everybody,
Hello.
hi, yeah, I'm here. Let me just say first and foremost, I've seen better days. Today is not one of those days. But nevertheless, on it, I'm here. Somehow. All right, how's everybody? I've had better days than today. Join the club, yeah. I have company. Yep. So somewhere in the middle of the day, the car ran hot, cut off with my wife in the middle of nowhere. She called me in a panic. I had to stop everything on. Then till the drive home. Then we went somewhere and they said, "Can you fix it?" I said, "Yeah, but not until in the morning." I'm like, "I'll pay you extra." They said, he said, "No, in the morning." I'm like, "What the hell?" If that was me and somebody said they'll pay extra, what do you do? Absolutely. What guarantee do they have that I'm gonna show up when?
In the morning. You might find someone else.
Don't we get it? What's, like my grandma used to say, what's wrong with us and the other them? Crazy stuff. I thought that would be an incentive. I only have one car. I'll pay extra. I'm like, no, sir. They're sorry, bring it in the morning. I had to tell my wife, fill up with water, drive home and pray. I'll walk to class because I don't work too far from here. But I almost didn't make it here. I'm like, man, I must be older than I thought. And I didn't realize until I started what? Walking a certain distance. See, like walking in the house is like no problem. You know, like in the office, no problem. But walking from some down there here, oh my God. All right. Oh, got it. Okay. Counting one. Oh. So if you guys are in that boat, that's good. There's always some crap going on, that's for sure. Okay, and guess what else happened? 4:45, I realized that I didn't have my textbook. This is not mine. What do you think my textbook was? Of course, because the car was supposed to what? Come and pick me up.
Oh, man.
So I'm like, you know what? Where do you think my register is?
Oh, my God.
And all the related work in the car, in the book, in the car. So I came up and said, Ms. Jane, if you don't have an extra text, I'm gonna have to swipe somebody's text and force them to hold on. And then they're like, what makes you think I wanna hold on? Luckily for me, but this text doesn't have my great notes that I made here and there. So now I'm in a sterile text.
Wow.
So it's been a rather interesting day. But nevertheless, here I am. Okay, and we're gonna do this by hook or by crook. Absolutely. All right. First things first. Does anybody have any homework for me? That's the first thing.
I'm finished homework. Some homework.
Sorry?
Some homework.
Hi.
It was difficult.
Hi.
Hi. I have a question. This is
Yes.
Vinique.
Okay.
I wanted to know if it would be possible for me to email the homework to you Wednesday because I am off the island, so I don't have access to a scanner to scan it to you.
Oh, okay. And that request came from who again?
Vinique.
Vinny. Okay. Vinny. Vinny,
Yes.
Wednesday. Okay, Vinny, that's reasonable. Who else needs more time?
Thank you.
You need more time? You need more time? Okay. You too. So Vinique said Wednesday. Is that sufficient time for everybody? Okay,
No.
let's say, so Wednesday is the new date. Everybody, okay, for the homework.
Thank you.
Does anybody remember what chapters you did for homework?
Chapter 4.
Some 60, some.
Okay, yeah, some questions on chapter 4. How many questions?
A lot.
It looks like plenty. It was only
A lot. It was a lot.
half of them are not difficult. They're just there to massage you. What may be the problem may probably tie you up for a little while. And that's the whole idea. It's intended to tie you up. And I know it's crazy between work and you think you have all the time in the world and then suddenly you don't.
Exactly.
It's crazy. Okay? So it's really, really weird how that happens. All right, so Wednesday then. Because remember, next week, Monday is what? Midterm already. You guys are lucky enough to have 2 holidays in there.
Do we have an idea what the midterm would look like?
Yes, I'll tell you what the midterm will look like.
Okay.
The midterm, if you've been reading, doing your homework and all that stuff, the midterm, I wouldn't say will be a piece of cake, but it certainly shouldn't present a nightmare to you. Okay? Your midterm will consist of simple definitions. You know, like what is an asset?
Okay.
What is equity? Things that you should know just from our discussions alone and from your reading. Okay? Simple definitions, maybe 2 or 3 from each chapter. How many chapters are we gonna have for the midterm? Anybody remembers? Chapters 1, 2, 5. Okay. So if you have 2 from each chapter, that's 10, 3 from each chapter is 15, somewhere between 10 and 15 definition questions. 1 or 2 of the definition questions might look like a short answer question, but it shouldn't be that long. Short answer just means instead of 2 or 3 words, you make 1 or 2 sentences. just to make things clear, but nothing spectacular. And then you will have 5 problems, if I remember correctly. 5 problems. 1 from each one. Absolutely. And let me give you a hint. The problems that you will have will not be too far away in structure than the ones you've had for homework. So even if you've attempted those homework questions and suffered through them a little bit, it will be a great benefit to you. Okay, for sure. So I wouldn't say they will mirror your homework, but they will not be too far away. So you should be okay. Yes.
It's good that you say that, but you don't know how good we do on the homework to know that if we on the right track or not. So
Well, I have only heard a few scanty questions to which we respond. Man, where's my thing? Yep, it's been a great day. My other eyes are not here. I don't know, looks like I'll have to use somebody's retina tonight. This is rather interesting, which means if they're not here, they're home on the table. What can I say? Don't presume that because you're not 50 or 60 or 70 yet, that you will, these things, doesn't matter how old you are, egg shows up anytime, anywhere, any age, any stage. Okay. I don't think so. It's going to be an interesting evening even. Some of the pressing questions we've talked about already, and I am presuming that because folks didn't raise any additional hardcore questions, you're pretty much familiar with what you did. I've looked through the homework. I don't see anything way off the mark. I saw somebody put expenses in a balance sheet. What's wrong with that?
Expenses go on income statement.
Remember, this stuff is not particularly difficult. It's just all about how you applied yourself. Okay? In order to become a good kisser, what do you have to do?
practice.
By kissing? Often. It's the same thing with this crap, I'm telling you. If you play around with this, it'll disappoint you. But if you practice, okay? Yeah. Yes.
I know that there are rules. For example, it says that revenue should be in the credit, on the credit side.
Yes.
And expenses on the debit, but when we go into something else, I'll see expenses on the credit side and revenue on the debit side. So I have been a little confused with certain stuff. Like doing my homework, I was like, okay, so why do they have?
The only time you should see that, Crystal, I got that right?
Yes.
Doggone it, one. The only time you should see that is you are closing entries, remember? Remember what closing entries are?
Yes.
Other than that, you shouldn't see it. Other than, remember, first of all, never put expenses on the balance sheet. It always goes on the income statement. And then somebody in the homework had accumulated depreciation under liabilities. What's wrong with that? Is that something you owe? No. It's just an contra offsetting to what? The cost of the asset. So if you, yeah, if you have, for example, building, what's your simplest guess once you put in perspective? If you have a building for $100,000, what part of the financial statement should that be? Yes. But again, remember, these things don't just fall in your lap. You have to keep looking at them. Just like smooching, smooth, 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 like that. Because if you don't, when the time comes, you're gonna egg that right up. It's the same thing. Okay, so keep, like, the homework I gave you, just do it again, each one. See, that's part of the practice. That's what I was hoping you would have been doing throughout the time. But a lot of times we get stuck, we get busy, we get tired, we get, God knows, car really, whatever, things happen. But that's really the key. So you're building for 100,000. The depreciation on the building, let's say, is $10,000. If you look in your balance sheet, you'll see it says less, accumulated depreciation, $10,000. See, brackets mean minus, and then so the book value of the asset then becomes what? $90,000. And that is the balance that will show up on your balance sheet. That's all. It's just, that's as simple as that. And that process never changes. Okay, so be careful. If you get a question that has, and you have to put in accumulated depreciation, you just find the cost of whatever the asset is and subtract it and then bring down the balance. That's it. Piece of cake, you're home free.
I'm just understanding it, so I don't have language to look.
But
You see what I'm saying? I agree.
that doesn't help.
I don't know if I saw one who put that.
Don't say that's what I figured you'd say that.
You're right.
That's why I don't want you to rely on it after the fact.
Right.
Because see, after the fact, if I pass it back, you'll still be like, and still won't get it. That's why I want you to see it in isolation. So in your mind, you don't do it anymore. So whatever I give you going forward, you have it now. That's the key. Okay? A couple of, so yeah, definitions and 5 problems. The problems will be similar to your homework. You want to help yourself prepare? Do all the problems you had for homework, or some of them.
Would it be the worksheet? I hope not.
I don't know what it is with students in this bloody worksheet, when in fact it's one of the simplest things ever.
No way.
Think so?
No way.
Yes.
No way.
Ask Cameron.
You got wrong. The worksheet was easy.
Yes.
Mine bought from the first try.
See that? Now, if you guys trying to figure out how he did that,
He just go to school.
He just go to school.
that's not the reason.
Go to school.
He young.
Ali gonna come.
That- That's not it.
It's green,
No,
sharp, sharp.
No, let me tell you what he did. First of all, those of you guys online, do you have this? Definition 5 problem.
Yes.
Yes.
Great. Okay, let me just make a note, persons. Just come out of school. Okay, watch this. I don't walk around doing worksheets every day of my life. Because while you've been doing this for a while, so you remember, that's true too. But that's not the only reason. A lot of my colleagues don't remember to do worksheets. Some of you, they say,
Right.
no, but that's because they haven't seen it since the Bahamas became independent. You guys just saw it when. All right. Now here, let me tell you what Cameron did. You're gonna be shocked. First of all, some of us will get it the first shot, others will get it the second time, and others will get it the third time, and others will get it this nth time. But it doesn't matter when you get it, what matters? That's my point. So what do you have to do? That's,
You gotta get it, and you paying for something. And you know, first and second job. I paying for this open pocket.
which means that if it takes you until the umpteenth time,
I gotta keep.
yeah, so while people are sleeping, you should be what? Practicing.
I gotta work.
It's no magic. I wish I could say.
You get what I'm saying?
Let me ask you guys something. Worksheet, watch this. Let's do a quick review. The persons who haven't gone back to look at the worksheet yet, because you'll be busy with other things, understandably, but you have to go back. You cannot just dance around it. What's the first thing that goes into a worksheet? Anyone?
Yeah.
The trial balance. See?
Oh, I know what you mean. account.
No, the trial balance. What's all on the side?
The accounts
Debits?
and credits.
And what's on this side? Credits. Where you gonna get that information from?
It's given.
Yeah, it's given from the question. So all you have to do is what? Copy it? And that's done?
That's easy. That's easy.
Are you one of them?
That's easy.
Okay,
That part of them. easy.
so this is not the part you're complaining about.
No.
Now, let me ask you a pressing question. What part are you complaining about?
No, I got the adjustment. I got the adjustment sheet, but everything after that, I fall off, to be honest with you.
That's okay.
Everything balanced out.
Everybody's
After that,
on.
I fell off.
Okay, thank you very much.
Yeah, the adjustment afterwards, I didn't.
No, that's okay. So let's go back then to that. How about that little review before we get into chapter 5? What page is the worksheet on? Good. See, it's nice when you can find this now. Now, if somebody had said, I know. That's not good. Is it on 159? Okay. No, I don't mean in the homework question.
Oh.
Yes, in the text.
144.
144.
Yeah, I know something.
The homework is for you to have fun with. And send me an email if you get stuck. 144? Okay. I thought this was the easiest thing in life. But according to Mr. He's like, man. Okay. 144. Is everybody happy with the trial balance, step 1? Okay.
That easy.
Okay, then we go to step 2, the adjustments column.
I wasn't sure that I was putting them.
So, in the right places.
Yeah.
Sorry. Where did these adjusting entries come from?
They gave it to us and-
Earlier? Okay, so the first adjustment A, do you see it? Do you see in the adjustments column A? That's one on the top, one somewhere else.
No, I get that. I see where you go.
Okay, good.
I got that.
Now, can somebody give me the journal entry for A? Sorry? The journal entry for A, the first adjustment, debit or credit? Debit prepaid rent, for how much? 3,200. And credit? This is the first adjustment in the adjustments column that we're looking at. A, labeled A. Does everybody see the A? The A is only there so you can track what you're doing. Okay, so she said the debit part of A is prepaid rent for 32. What's the credit part? Find the other A.
It's 1,600.
Sorry, I gave you the trial balance amount, so the adjusted amount is 1,600.
Oh. So we debit prepaid rent for 1,600? Are we sure? Oh, be careful with the journal entry or else you're gonna get stuck. What do we debit? Rent expense. For how much? 1,600. And what do we credit? Prepaid rent for?
1,600.
Now, this is the journal entry that we did originally, isn't it? Now we have to go to the adjustments column and put it there. Where did we put the rent expense? In the worksheet. Where? Yeah, Does everybody see it? Down at the bottom, in the account called, in the description called rent expense. And where did we put prepaid rent? Credit in the adjustment column. So everybody see that? Courtney, not Courtney. Yeah, Martin, do you see the credit to prepaid rent?
Like I say, on that part, I get. I got mixed up further down.
Oh, so you get the adjustments column.
Yes.
Then let's go then to the adjusted trial balance.
See, my problem is where to add, when to subtract, and where do we go?
Okay,
That's what makes me-
let's look at, so you have no problem with the adjustments. So let's go to the adjusted trial balance. Any adjustment for cash?
No, wasn't know.
Accounts receivable,
Yeah, but
how much? So what do we do? Is the adjustment for accounts receivable in a debit or credit column? So if it's a debit for 400, what do we have to do? We add it to the accounts receivable balance of how much? 4,600 plus 400. So we carry over what amount? You see that, Martin?
Debit to debit is hard. Debit
Yeah,
to credit
or you mean
is
that
hard.
rule that we should have learned by now?
Right, like how to break it down, yeah. Like debit to debit is hard, debit to credit is subtract.
Yeah,
Subtract. Credit to credit is added,
yeah.
subtract, okay, that's where I was lost.
Oh,
That's what lost. me.
that's what loses most
Yeah,
persons when they
that's
get
what
lost. And it's because everybody has a different way of saying that.
Right.
If that works for you, that's what you
That's
do.
how it worked for me.
Good, let it rip.
Yeah,
Okay, for somebody else, they don't do it that way. They have their own thing because they know that debits increase debits
right.
and that credits reduce credits, debits, and so on. So they know the other way, but whatever works for you, that's the whole idea.
Debit to debit, credit to credit, debit, credit, everything like add, subtract, and then mix up like that.
So then if we go to the adjusted trial balance, then you now understand why those totals are the way they are then.
Anyway,
Well, what's the next thing under accounts receivable? Any adjustment?
that's something.
Debit or credit? For how much? What will a credit do to a debit?
Subtract it.
Yeah, reduce it. And here's how it looks in the real world. What's the original balance in supplies? Of how much? 5,200. And the adjustment is? 1540. Credit. So the balance in supplies is? Is that the amount in the adjusted trial balance? See that? The adjusted trial balance is really just reflecting the general ledger transaction.
Right.
That's all. This worksheet is just for the accountant to see everything in front of him. It doesn't change what has already happened in practice in the general ledger.
And like I say, now I get it. I just didn't know, like what was probably me like when to subtract, when to add, when to, you know what I mean? That was.
I understand completely. What follows supplies? Prepaid rent? Any adjustment? Debit or credit? Okay, so credit reduces or increases prepaid rent. Okay. So I think, except for Martin, who's now gotten it. Oh, so you're one of the add subtract persons too. That's okay. Not everybody does it that way,
So
but
opposite is subtract on the same
On the same side as
if that works for you, but at some point you may find that that may not work every time for you.
okay.
But if it works most of the time, that's fine for now. Because remember, the rule is better. What's the rule? The debits in accounting are what? Assets. What else? No, not liabilities. Normal balances. Debit balances are assets. What else?
Withdrawals.
Withdrawals, expenses. Absolutely. These are all debits. Credits are all what? Liabilities, capital, revenue. So anytime you see an account with these assets in it, with these in it, it should be a what? Debit. And anytime you see an account with, it should be a credit, always. So once you understand that, then debits will always increase these accounts, credits will always decrease them. Over here, credits will always increase these accounts, debits will always decrease them. Mhm. Absolutely. So we all get it from a different angle, but doesn't matter as long as you get it at the end of the day. Okay. So once we understand now how to carry over adjustments and create the adjusted trial balance, if you do them correctly, it should balance. If it doesn't balance, you made a mistake somewhere, you have to go back and check, just like in the real world. Check. Now, some students in examination, they panic, they don't want to go back and check. That's, man, I'm not checking that. That's okay, because time is important too. But just to let you know, the two columns should balance if you did it correctly. Okay, so your trial balance should balance, all your adjusting items should balance. The adjusted trial balance should balance if you do all of those, if you carry them over correctly. How would you know if you make a mistake? It will not balance. Correct. Okay. Once you've done that, then you have the other two statements to put into the worksheet, which are pretty straightforward. Which are the income statement items? What are the key items in the income statement? Yeah, expenses and revenues. Okay, what are the revenues shown in this worksheet? Now, is unearned revenue revenue? What balance, what is it, a debit or credit, unearned revenue? Credit, but is it actually revenue?
Yes, you wanna get it. That's a accounts receivable.
Now, this one is always tricky for students. If it's unearned, it is a credit, but it's not revenue. What is it instead? You probably don't remember. Unearned means you haven't performed the service, correct? If not prepaid, but rather what? If you haven't performed the service, then you owe the service. What is owe in accounting?
Liability.
A liability. A liability. So your unearned revenue is a liability because you owe it, don't you? Okay. And you get used to the rules over time. They don't all fall into place overnight. Okay, so we keep working it. Okay. So whenever you see unearned revenue, you know that's a liability because you owe it. When you see revenue, you know that's what? Earned. Exactly. Both of them are credit balances, but they don't go into the same statement. Revenue goes into which statement? Income, very good. And unearned revenue goes where? The balance sheet. Thank you very much. Azo? Thank you. Here we go. This is kicking in. So this flicking thing is kicking in finally. All right. So we know that revenue is the credit side of the income statement. What is the debit side of the income statement? Expenses. And so in this worksheet, when we get to the bottom and we add them up, what total do we get for expenses? 9,640 for our expenses. Okay. Over here on the debit side. And on the credit side, what do we have? 13,600. So when we balance them off, we have a difference of what?
3,960.
Debit or credit? Debit only to balance the worksheet, but in real life, debit or credit?
Debit?
That's interesting. If you generate revenue of 13.6 and your expenses are that, what does this 63660 represent? Profit or loss?
Net income?
Profit. Okay, profit. So what happens is this profit is only shown as a debit in the worksheet to do what? To balance it. So when we put it here, then the worksheet balances, doesn't it? We have 13.6 and 13.6. That's the only reason why it's on the debit side. But we know it's actually a what? Profit, which will be credited where? At the end of the year. Where does profit go at the end of the year? To capital.
Yeah.
Yeah. If you have withdrawals, what does that do to capital? Yeah. What does profits do to capital? Increase it. Absolutely. Okay. And that's all that is. Simple as that. Well, if you love numbers, they don't. You just get tied up. But if you hate, just like marrying somebody you don't love, no matter what they do, it's the same thing. If you hate numbers, it's the same thing. No matter what anyone tries to do, you at the end of the day, you still say, I still hate numbers, see? But for the sake of getting through and getting this stuff, you don't have to love it. You just do what? Yeah, just do it. Tolerate it. Just how we tolerate folk. I hate that person, but I'll tolerate them because they are something. Yeah, nice, rich, connected, or something. Kind of like that. So that's okay if you don't love it. Okay, not all of us love numbers. Some of us do, others hate it. But that's okay. Don't let that keep you from doing what? Achieving your goal. That's the key. Okay. So that's the income statement column in the worksheet. Very simple. Revenue over here, expenses over here. The difference is put over here just to balance it. But we know the difference in this case is profit. We know that from chapter 1, don't we? Please, if I give you a simple income statement next week for the exam, don't egg it up. Because it's only what? Revenue minus? Okay. Class time. You may not need all of the time, but you'll have the full class time. 2.5 hours. No. No. Open book will make your life more miserable. You have to come in with all that practice you did and let it rip. That's it.
So once we ready to do the worksheet, we have to prepare the income statement. What is that? What do you have, balance sheet?
Yes, that's really the reason why the accountant puts all this stuff here, so he or she could have everything in front of them when it's time to do what? Prepare statements. And by the time, and all the mistakes, errors, etc., will be discovered where? Somewhere between the trial balance and the adjusted trial balance. Because in practice, people don't get everything right all the time. Only in classrooms we want to get everything right all the time. Quick. This the hell doesn't work that way. Of course. Even in the real world, with experienced people. Why do you think some people die under the knife in surgery? Because some doctors do what? Muck it up, don't they? And then they try to avoid being what? So don't worry if you don't get everything right quick. Doesn't work that way. Even the best of us muck stuff up. How could a rookie not want to muck it up? Don't do that to yourself. Just prepare the best way you can and let it rip. That's the key. Now, we have some people that like to go to happy hour when they should be home doing what? And then suddenly a miracle. Or they like to go visit folk, having fun, drinking, whatever, people like that, but feet up watching Netflix when they should be home what? Yes. Then suddenly they walk into the classroom and they expect like something does not work that way. Hell no. Can't say, didn't say. Okay, so yeah. Question.
Are you able to go to closing entries?
Closing entries, yes. Closing entries. Did you have it for homework? Okay, let's look at one of the simpler ones so it doesn't tie us up too long. Closing entries, which question? Pick. I think the first one. Yeah, from the homework.
Okay, they say how much for realty company income statement accounts at the end of the fiscal year. December 31st shows. December 31st follow. Prepare the required closing entries. Lucas Thomason is the owner. So they have the accounts, debits, credits.
Right,
So they have commission revenue,
okay.
wages expense,
Mhm.
rent expense.
In other words, they have all the revenue, they have the revenue and all the expenses.
Right.
Great, okay, now, because we know, do we close balance sheet accounts? Why not? Martin? Why don't we close balance sheet accounts? Because they are what we refer to in accounting as real accounts. So they are not closed at the end of the year. Okay? Period.
Yeah, I don't know, we will look at that.
Yeah, there's a closing entry is one. 154.
Yeah, question 154. The rule in accounting is we don't close balance sheet accounts. We only close income accounts. Okay, rule. Sometimes students keep questioning like, but if I feel like closing it, who cares how you feel? But why shouldn't we? They start debating it philosophically and get stuck. Just don't. Okay. So what's the key account that we use to close accounts at the end of the year? What do we call that account? It's a temporary account. It has a name and it's a temporary account. What is the name? No. The income summary account. All right. It's an account like any other one. Income summary account. Now, this is the revenue account in the general ledger here. What is the total revenue?
25,620.
25,620. Now, notice I'm bringing it because I'm familiar with this crap. You're gonna be battling with it because you're getting familiar. But that's okay. And before you know it, you'll be doing some crap you didn't know last week or week before when you started this class. That's the beauty of this crazy stuff. Okay, whether you're aware of it or not, these last 5 weeks will change your life forever if you're interested. That's because some people, they see it, they get it. They go home and they do their own thing. I'm going to do my own income statement for my family now. So they grab their textbooks, see, like that, because now they have what? Knowledge. And flick do it. Then they go to somebody else in the family. I'll do yours for $50. See that? Why you want to do it free? Because free? I suffered through this. In accounting class, you want me to do it? I'll do it at a discount, but not? Yes. See that? And all of a sudden, you say, oh, that's why Mr. Logan's trying to get us so I can make money now, even. Because remember, if you go to a little mom and pop, a little smaller thing, and they get stuck, you could tell them, I can prepare an income statement for you so you can see how your little thing did at the end of the year. Now, And you have to remember, grab the textbook like this. Maybe you don't get it yet. But you will if you're interested. See, that's the whole point. All right, now your expenses are itemized, aren't they? But I'm not gonna itemize it here in the interest of what? Time. So give me the total expenses.
15,830.
15,830. Now, in the real world, we'll close them individually, don't we? Because we have an individual account for what? Each expense. I'm just doing it in one lump sum to save time tonight. But we close them one by one. Okay. So let's close the revenue account first. What's the journal entry to close that? Because remember, these journal entries that I'm asking you to do are the same journal entries that you have to put in the general journal after you close the accounts. So you have a record of the closure. Remember that? So let's do the journal entry first. What's the journal entry to close this revenue account? Journal entry means I need a debit and a credit. Debit revenue for how much? 620. The credit income summary for? Same amount. Shortcut. I get it. That's the journal entry to close the revenue account. What's the journal entry to close the expense account?
Income summary.
Debit income summary for how much? 15,830. And credit? All the expenses one by one. I'm just putting a total here to save time. Does everybody get that? Okay, but you'll have all the expenses listed individually. Because they listed individually in the where? General ledger. We don't have any summary expense account in the bloody general ledger. They are, each account expenses has its own account. So we don't mix things up. What is it? Yeah, like, what do you wonder why you lost sleep?
Yeah, so it's lost.
What is it? Yeah, it's funny. What did the question ask you to do?
Required closing entries.
Okay. Are there any withdrawals in that question? No, you're not even any withdrawals. Anything else in this to close?
Expenses and.
Wow. So that was easier than you thought then. So let's post it then. Debit revenue for this 25. But see, you have to show these in your T accounts to answer your homework question, right? So when you debit revenue, what's the balance in the revenue account? 0. Close or open? Closed.
So you would have to do all the T accounts and stuff.
Of course. Look, the T accounts represent every account in the general ledger. In accounting, there's an account for every single type of transaction you can imagine, from tens to hundreds to thousands of accounts.
For each one, we're going to do a T account.
Yes,
Okay.
So we got this on exam too.
more than likely, because that's an important part of the accounting process, isn't it? I might give you a question on that just to see if you bother to look. Let's close the expense account. Let's post debit income summary. So this income summary credit goes here, correct? That's this baby here. From the revenue side. From the expense side, we debit income summary for how much? 15. 830 on the credit,
Expense,
says for how much?
830.
Remember, these will be individual though, correct?
Mhm.
And so individually, what happens to the expense accounts? All of them will be? I know it stinks, doesn't it?
Yeah. So what happens to the income summary account? Do you have to close that too, or that?
Yeah, she can really get that juicy last part. Well, since these are closed, what's the balance in income summary? Debit or credit? Debit. In accounting, we always use the balance of the higher side. Does that make sense? The larger balance in this income summary is how much? And the lot smaller balance, expenses? 15. So the difference between the two is a credit of 9790. What does that 9790 represent? Yeah, net income. How do you know? Oh, it's given. So let's say it wasn't given.
Revenue and expenses.
Revenues are greater than? Remember that rule? If expenses are greater than revenue, what does that rule suggest? Simple as that. Sometimes it's so simple. Well, it's only simple after you mess with it. See what I mean? Nothing is simple until you mess with it. Even the simplest of things. All right. So now we have a balance of 9790 sitting in income summary. But we know that income summary is temporary, isn't it? It has to close. So we have to close it. What's the journal entry to close income summary? For all of you who actually did the homework, read your textbook, there's no magic.
I mean, I get it, but I didn't go through the whole T accounts and all of that. I mean, they did it wrong.
Well, that's okay. You still have a week to do what? I mean, you still have until Wednesday to do what?
Right.
Correct.
No, I think I got the right answer. Because like I said, I put all the expenses, what was given on the credit side, the commission revenue I had on the debit side, and I calculated today, I put the net income was 9790. And I got the sum of 25,620 on the balance off.
But you didn't, but you weren't sure how you got that. But you should be now that we've gone through this
Yeah, but
process.
you went through it, yeah.
Absolutely, and that's okay. That's why,
But what you was points if you didn't do all those T's and still came up with the balance.
well, how would you come up with it? You
Answer my question.
you do have to show the working,
Yes, sir.
but if you show, if you do something helter-skelter and come up with some correct numbers on the correct side by accident, you'll get credit for your accident, but you won't get full credit. Okay, for sure.
So we have to do T accounts first.
Well, everything, that's what I'm.
So
If you don't do T accounts in accounting, you will drown. But see, yeah, some people, they want to do it in their head and just come up with a number. You get points for that one number. But if the answer required T accounts and with all these items, you lose points for every one you don't show.
But we have to put the date and we don't need to account. I mean, and they say.
Well,
31st.
Well, yeah, if you want to put the date in, for our purposes, you won't lose credit at this point for if you don't put the date in. Okay, but remember, we saw a nice, what a real journal entry looks like. You don't have to set it up like that for our purposes at this stage of the game. Okay, that's for when you get out there in the real world and you see a journal entry, you know that how a complete journal entry looks. But for our purposes, a simple journal entry doesn't have to have dates and all that other stuff at this stage of the game. And a simple T account to show your transactions would be sufficient. Okay. We haven't closed this yet. What's the journal entry to close it? Debit income summary for how much? 9790. 9790. And we credit capital, why? Why do we credit capital? Not, well, yes, it does go back into the business. But there's something else we learned that we have to try to remember, that revenues does what to capital? What is the balance in the capital account? Do we know? I mean, do we have it in the crest homework question? No, we don't have it in this case, but that's okay. Because profits always increase capital. Losses always decrease capital. So here we made a profit, so capital is credited to increase it. Remember, the normal balance for capital is what? Credit. So we credit this, it's going to increase it, see? For Martin's sake, credit means add. This credit,
Rocky.
sorry, Maki. He prefers to say, well, if we add one credit, the other one we add it.
That's all right.
And that's okay. And eventually you'll start saying, you'll know that credit in your mind means added in this case, and debit means, yeah, subtract. Yeah, that's fine. Okay, so we debit income summary for 9790, which brings us to a balance of what? 0. And we credit 979 here to whatever is up here. That's your closing entry, simple as that. I know it sucks, doesn't it? Does it seem like a big old issue? So if I give you 1 million revenue items and 1 trillion expense items, doesn't change the principle. Do you see what I mean? You do the same thing. You don't panic and say, all these numbers are driving me crazy. I don't know what to do. Why not? It's the same principle. All right. Okay, so that was a nice little exercise. For those of us who may still have been on the fence, hopefully our discussions and these couple of things, the questions that were raised, especially with the worksheet, the adjusting entries and the closing entries, they're very important. Okay, please practice them. Chances are you will have a question that involves them, or 2 or 3. Because they are fundamental to the accounting process. Okay. And if while you're studying and doing them again and practicing them again, you feel frustrated, that's okay. That's how you're supposed to feel. You just stop, drink some Milo or something, snooze for an hour and get back and go at it again. Nobody drinks Milo. You haven't even heard that word in a long time. I know. All right. Okay. So I have my list of persons in class. Let me see who is online. Okay, who's online?
Vanique,
Vanique is online. Okay. Who else is online?
Shadell is online.
Shadell?
Yes.
S-H-A-D.
Shedell.
E-L-L, yes.
Mhm.
Anybody else?
Ivania.
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 Ivania. Sounds very Russian, Ivania. Okay. Anybody else online?
Victoria.
Victoria, yes. Okay, looks like most of us are here. Perfect. Hi. That's what I was hoping. Let it rip.
No, not the party. But I mean, why we can't be online?
Why?
We can't be online. I remember the lady used to sit here and I don't see it no more. I don't know if she put the clock.
You mean Vanique?
Yeah.
Vanique is hiding online.
Right.
She's in cyberspace.
Right. So-
don't worry, I'll be back shortly.
She'll be back. She's just traveling somewhere and using technology to help us stay up to date. Benny, I think you've been discovered.
Well, I think I remember saying that you would have to petition whom?
I mean, for me, what I did was I just called the school one day. Whenever I started doing virtual, I just called and I asked them if they could send me the link. And Miss Dean sent the link to my email. She didn't ask any questions or anything like that. I tell her I couldn't make it to class that day, and she just sent me the link.
You asked for the link and what happened? Or else what? Interesting. Okay. Yeah, you'd have to make an individual request until we get all the way down to nobody, and I'm in here by myself, and then it makes no sense. And then I end up home as well, twiddling my thumbs, lecturing in my pajamas. All right. I understand. But in Ruston Square, they were there the other day protesting. Everybody knows why? Was that what it was about with Lincoln Bain? Yeah, teachers do need a raise. It's
one of the best often sketches or whatever.
yeah, that's why it was appropriate that they arrested him and them.
Yeah, I agree.
We know that game. That's the same game Joe Biden played, got away with it, acting like he's a nice guy.
He's trying to go out on a historian.
But he's the devil from the deep blue sea.
Right, I agree.
More of a devil than Trump. See, let me tell you something. Trump, at least you know where he's coming from.
Right.
He's not too pretentious. The worst people in the world are the pretentious snakes who act like they're flicking. Yeah, I'll go with Trump any day because I know he's coming from. Shut up! I get that. But if you walk past that person, don't hear nothing. Like, oh, you don't know it.
He wouldn't tell you that. I hate it.
Yes, it's a very interesting thing. But see, the world is getting caught up in pretentiousness. So if you are like a Trump or outspoken or whatever, you are going to be rejected. So you have to learn how to be.
Nice.
Not alive.
Yeah, be slick,
Yeah, select.
pretentious,
Not alive.
be who you are not in order to survive. Which is exactly opposite to what the Bible said. Do not be a what? Starts with F.
A fool.
A fool is good.
Not in the world.
That's another one, but I'll use this one for the moment. Fake. Can't use too many F words, man. I'm using the wrong F word. Okay. All right. So chapter 5 is our last chapter. Chapter 5, I hope somebody looked at chapter 5. It is not a difficult chapter. It is mostly a reading chapter. Learn the concepts, what they mean. Do you need to remember everything? No. Those things are in black print with definitions and stuff like that. Learn them. Know what they mean. You don't need to remember every single detail unless you want to. But folks, let me tell you a little secret, especially if you're a working student. It stinks even if you're not a working student. Reading stinks unless you love it. Reading, if you're working, stinks unless you love it. It takes time, effort, and energy. And then you're watching the world have fun while you're turning pages. But that's okay. That's part of the academic process. Okay? Suffer through it. When you're tired, sleep. Get up, go at it again. Start early. Get up, go at it again. Lunchtime, if you have a break, pick up your textbook, like whatever you need like that to stay on top of your game until it's all over. There are huge benefits. Because see, when you're reading in between, you're not only reading to get ready for examination stuff, you're learning other stuff that will help you later on with other things in your life, even though you can't see it now. It's crazy as hell. Because man, when I did my first accounting class, I'm thinking, what the hell am I doing? Wasting all of my money. It's stinking class making me suffer. Every class home, stinking homework. Not knowing. I agree. It stinks. I'm a lecturer. I used to be a student. It stinks. Okay. And then when you start moving into more difficult accounting classes, it stinks even more. Especially if you're a working student. Okay, but that's okay. We move on. Give it your best shot. Spend as much hours as you possibly can reading, practicing. It will make you miserable, but at the end of the day, there are known and unknown benefits. If I live long enough, you may even tell me somewhere, you were right. I said, I know. All right, so what is the topic for chapter 5, anyone?
Foundation,
Foundations of?
financial reporting.
And yeah, so chapter 5 is twofold. We talk a little bit about financial reporting, and then we look at this very interesting document called a classified balance sheet. Sometimes students have difficulty with this initially because they're still getting used to how to put things in perspective in accounting. And this is one of the reasons why we introduced classified balance sheets early. So you could mock things up and get familiar as you mock them up. Don't be afraid to mock things up. Okay, the person who put the accumulated depreciation in the balance sheet, I was happy to see that. So I can come back and say, that's not what we do. Now you know not to do it. The person who put the expenses on the asset side of the balance sheet, now you know you don't. That's what it's all about. There's no magic. Even though some of us get a little snooty when we learn stuff and act like it's magic, it's not. All right. So I hope by now most of us have an idea of what financial reporting is. Basically, it's reporting of financial information. The 2 typical statements, 3 that we've learned so far. Anybody can remember the 3 that we've seen so far? Financial statements. The income statement, owner's equity statement, balance sheet statement, and we touched something else too.
Cash flow.
Not the trial, yeah, but, and the other one? Yeah, somebody
Cash flow.
said it, the cash flow statement. We might see that again before the semester is over. Okay. Does cash flow statement deal with anything other than cash? Transactions? No. Only cash. The income statement deals with cash and other things like receivables, remember? Receivables in the sense that if people buy stuff from you and they don't pay right away, you put the receivable in the balance sheet, but you still record it as what? Revenue. In a cash environment, if they don't pay cash, you don't record it because you only record what you get. In accrual, for the income statement, even if you don't get paid, you still record it as a sale. Very interesting concept, isn't it? It's called O. Somebody gets your stuff and they don't pay, you've given them credit. The worst thing you can do is give credit to the wrong people. How do we know who's wrong? We don't always know. It's like some people marry serial killers and then realize what they did until the hatchet is coming down. Like this, I didn't know you were paid off. So you can't always tell. Yes. I think you remember Ted. That is sick. Those of you who don't know about the Ted Bundy story, go to Netflix or whatever, look it up, watch it, read about it. Okay? The Ted Bundy story. It keeps reminding you how deep and does evil really go. Dahmer, my God. Another suck egg of the worst. You've been watching.
I love documentaries. I watch it before I watch it.
No wonder. And she's been watching all the horrible guys. Those 2, they were horrible. For those of you who don't know, check out Jeff and Teddy.
I'm John Gacy.
And John. Okay, I wish I didn't have time to be bothered with them, but anyway, I got stuck
Yeah.
watching that disgusting.
What they do?
Well, I watched it some Bundy from back in the day.
Okay.
Dahmer's from kind of back in the day too. These old seasoned, stinky, nasty serial killers. God. Chop people up even.
And eat
And
them.
eat them.
Yes, God.
That's what they say, the dog. They never see them eat them.
No, they don't show it graphically.
Yeah.
But with a little imagination, that's enough. Okay? The only thing worse than that is the guy who killed those children in preschool the other day. Who the hell kills children? Up in the middle, Far East somewhere, Taiwan or whatever, somewhere. The ex-policeman killed 22 preschoolers. You guys didn't hear about that? 2 or 3 weeks ago, he went into a preschool and shot 23 preschoolers to death, along with some 20 other people. Who the hell kills little children? I mean, we've always been killing children, but I'm just saying, when are we going to quit killing children? We've always been sacrificing children, but the God who will give what you will, child dead. Man, from the beginning of time, but this thing with killing children. Anyway. Okay. Stinks. All right. So this first exhibit then, exhibit 1, what's in those boxes? What's the heading in those boxes?
Thank you.
Exhibit 1. Fundamental qualitative issues followed by. Sorry. What's the next box? Enhancing qualitative followed by accounting conventions followed by. Yes. So those are basically the topical issues that we're going to be looking at in this particular chapter. Just to give you some background information, when you read it, you'll see how accountants think, why they think that way, why we do certain things. Because in accounting, there's certain conventions that we need to keep in mind so we understand the nature of this business and everybody always remains on the same page. Okay, so we're going to get our online people in it since they're home with their feet up in pajamas. Yeah, sipping wine while we are here where the serial killers are. Beneath. So God, she didn't even answer. Venique. You know, I don't know, maybe it's ESP, the Holy Spirit, my grandma said, whatever. But what made me call Venique's name first? Why in the world? Venique.
Hi.
Oh, there you are. Okay, Venique, do you have your textbook in front of you?
No, sir.
You know your textbook?
Not in front of me.
Doggone it. Okay. So we're going to put you in the black book for reading next week. I mean, week after next. Okay.
Problem.
Shadell, are you there?
Yes, sir.
Okay, you have your textbook?
Yes, I do.
Lovely. Go down to page 170 at the bottom where it says objectives or objective of financial reporting. Do you see that?
Yes, I do.
Okay. Why don't you read that section at the bottom there and that little small piece on the top of 171? Get us started. Get us warmed up.
Mhm. Okay, objective of financial reporting. The Financial Accounting Standards Board emphasizes the needs of current and potential investors or owners and creditors while recognizing the needs of other users when it defines the objective of financial reporting as follows. To provide financial information about the reporting entity that is useful to present and potential equity investors, lenders, and other creditors in making decisions in their capacity as capital providers.
Now, stick a pin for a moment, Shadell. See, what she's saying is let's say you want to invest, anybody in this class wants to invest in a local company in the Bahamas, Finco shares or Cable Bahamas, correct? One of them. You want to purchase shares in one of those companies. Would you just go and purchase them? Maybe, because nobody's a man, I don't know anything about the financial statement. But if you, now that you know there's something, what can you say? Can I see your what? Yeah, first, before I buy your shares. And now you start looking at revenues and expenses, what's sitting on the balance sheet, what assets are there, what liabilities are there, what the equity looks like. So because you have a little information, you may not be an expert yet, but now you have information. So you can do your own little assessment to the best of your ability with this new information you've learned over the last 5 weeks, 4 weeks so far, and 5 weeks, 6 weeks tonight. Yeah, and then be able to make a more informed decision than the person who does not have your information. That's the beauty of this thing called financial reporting information. It's necessary for the firm, and it's necessary for people who need to use the firm's what? Information. Suppose the firm has a loan with Royal Bank or Bank of the Bahamas for $50 million. Would they be interested in seeing these reports? Would they? By all means. The bank wants to see quarterly statements, monthly even, depending on the amount of money, daily. They're watching. Because why? They have a loan outstanding with you that you have to pay them back for $50 million. Would that pique your interest in knowing all the time what's going on in that firm? By all means. In fact, the bank might say, because we're giving you this money, this amount of money, we need you to have audited financial statements not once a year, but twice a year. We need you to send us financial reports every month. And you're like, man, that's a lot of, if you want our money, that's what the conditions have to be. Sign here or get out. Reason? Because if you don't watch, there's a tendency for people to do what? Firms. Nonsense. Just like in money laundering. Anybody ever heard about money laundering? And all the firms who are fined millions and billions of dollars for violating money laundering rules? Ever heard that? Yeah. Because left alone, people always have a tendency to mock things up, try to get away with murder, literally, thief money in Bahamianese. That's just the nature of some people. And that's why we have all of these programs in place, right? So this financial reporting stuff is very useful and very important, not only for the persons inside the firm, but for all these other stakeholders where outside that she's talking about, investors, lenders, government, all these people interested. The government is doing all kinds of audits now on companies if they're paying the correct VAT. And they find out a lot of companies, even the major companies, have been trying to play with the books so they pay less VAT, which are less taxes. Okay, Shadell.
Okay, information that is decision useful to capital providers may also be useful to other users of financial reporting who are not capital providers. To be useful for decision-making, financial reporting must enable the user to assess cash flow prospects. This is the ultimate value of a business and its ability to pay dividends, interest, or otherwise provide returns to capital providers depends on its ability to generate future cash flows. Capital providers and other users therefore need information about the business's ability to generate cash flows. Assess management's stewardship. Capital providers and others need information about the business's resources or assets, claims against them, liability and owners' stockholders' equity, and changes in these resources and claims resulting from transactions, earnings and cash flows, and other economic events.
Who do you guys think capital providers are? In this case, capital means money. Who do you think capital providers are?
Investors.
Of course. If you invest your money in something, are you going to just go to sleep and ignore what's going on in that firm? No. When we get married, some women always say, Cameron, I invest my whole life with you. Now you want to run off with some doggone Shadell.
Oi!
I'll kill you first, Cameron. Invest my whole. Of course, she shouldn't kill you. Nobody should kill anyone. but people still do for some strange reason and try to justify it. So I was with him for 20 years and he wants to leave. If I can't have him or her, nobody will. That's
That's
not a
right.
good reason. Never was, never will be. But we still murder people still anyway. Like, I was mad. I lost my mind. I was temporarily insane. Are these things debits or credits? Depending on what side of the ledger you are on. Shadell, because that you're the one who's reading. Keep going.
All right. Financial reporting includes the financial statements, balance sheet, income statement, statement of owner's equity, and statement of cash flows that are periodically presented to parties outside the business. Management's underlying assumptions and methods and estimates used in the financial statement are also important components of financial reporting. Because of a potential conflict of interest between managers who must prepare these statements and investors or creditors who invest in or lend money to the business, financial statements usually are audited by outside accountants.
Called auditors, yes. Okay, that's it.
Yes, sir.
Man, that went by so quickly. But notice in those few paragraphs, if you are interested, they are loaded. If you're not interested, it's they're not loaded. There's a lot of information to gather just from reading alone, no matter how tedious and cumbersome it might seem. So many things occurred in what she just read. We already talked about a couple just like that. Okay, and hopefully you've seen now all of a sudden why financial reporting is so critical. Is this is not just something we do for the hell of it. Get through the day, get through an examination. Hell no. This is a worldwide phenomenon. That's just like so many other professions. Okay, it is the foundation of the substance of reporting of financial information, and then trusting our auditors to audit so that we can rely on the reports from the auditors. In recent years, many auditors have been found wanting by not conducting proper audits, and many of them have been fined and in some cases prosecuted. This is unfortunate because if we cannot trust our audit in the financial reporting, dog eat our lunch. Because certainly the board and senior management who we should trust most are sometimes turn out to be most untrustworthy. They sometimes turn out to be some of the biggest liars and thiefers on the. Feel free to quote me on that. It's a fact. It's public knowledge. I didn't make it up. Okay. All right. Thank you very much, Shadell. Way to go. So let's look then at some of the qualitative characteristics of accounting information. Qualitative. Now, qualitative tend to mean non-quantitative, does not involve numbers. Whenever you hear the word qualitative, we're talking about concepts and thoughts and that sort of thing, versus quantitative, which tends to involve dollars and cents in accounting. Okay, so the first qualitative characteristic in accounting information is something we call relevance. Do you see that? What is the meaning of relevance? Did they give it? They usually give it in the first sentence. Do you see it? What do they say relevance is? Yeah, in other words, it has to be relevant. So if management wants information for the board meeting on the 30th of September, and you bring it on the 30th of December, is that relevant? No, the time has passed. Okay, for sure. If you want to report on apples and somebody brings orange information about how beautiful the report is, it doesn't help because you want it on apples. It has to be relevant by all means. All right. And so under the relevance concept, we have a couple of things floating around. Like what? What kind of words do you see floating around? Predictive value? What does predictive value mean? It's usually in the first sentence. The rest is just descriptive to help you understand if you need to. What is predictive value?
Making decisions about.
Yeah, making decisions about future actions. So if you pick up a financial statement, an income statement, when you look at it based on the information in there, you can predict whether you'll invest in that firm or not, true or false. Okay, predictive value. What's the other one? Which one? Yeah, confirmative. How is that different from predictive? What does that mean? Yeah. Are they the same? Predictive and confirmative? No, they're not. Okay. Make sure you know the difference between the two. All right, anything else in relevance? Something called materiality, do you see that? Yeah, materiality. In accounting, what does materiality mean? Anyone? Materiality. How is it defined in your text? Online, you can jump in. Well, how does your text define materiality?
Suppose the nature of an item and the size of the statement.
Keep going.
Immaterial items are not relevant to the economic decision. The materiality of a normal and determined by relators of the dollar value of the element of the financial statement.
I know the way they have it written is like, man, that's the best you could do for people to understand.
Yeah.
Yeah, that's the other problem. But yeah, that's just like every profession has this mumbo jumbo. Engineers, doctors, lawyers, everybody have their own mumbo. Politicians even have their own mumbo jumbo. Anybody remember when Perry Christie was prime minister? No, yeah. But we have to give him credit. He was quite eloquent though. Even though he didn't say much most times. He was eloquent in everything he said, not everything, but things he said. Like Biden's saying everything and saying nothing. And people like that.
People like something new. And he came and he had to Perry Shepherd, so something new, and we like that. So let's go with it.
That was the thing that got him in, the shuffle.
The shuffle, because there's something new. Hubert was in shuffle, Ingram was in shuffle.
How did he get in? Say what I mean? Mean what I say. So people, oh my God, let's go. Yeah, absolutely. That sounds serious. You're going somewhere. All right. So this, yeah, they messed up the definition of materiality. That doesn't mean what they're saying is not true. Okay. And as you get more and more involved in accounting and mess with the jargon, it gets clearer and clearer. But really all we're saying here in materiality is this. In accounting, materiality, or whether something is important or not for accounting purposes, is not only a function of dollars and cents. If it's accountants consider to be material, if it's something that's going to change our decision or our perspective on a particular matter. That's what we mean by materiality in accounting. If it's not going to change our decision or perspective or the decision or perspective of the investor, then we say it's immaterial in accounting, even if the value is $1 billion. Okay. $50,000 might be material in a company if it's going to cause an important investor to do something that they normally wouldn't do. $1 billion might be irrelevant because $1 billion has nothing to do with that particular firm, and so therefore it's not material to that firm. Okay, so materiality is really what will cause an insider or an outsider connected to the firm to change a particular position or decision. That's the key thing to remember about materiality. Okay. That is what determines whether a matter in accounting is considered to be material, meaning important or not. All right. So that's the relevance concept. What's the next qualitative concept that is given? What is it called? On page 172. Faithful what?
Faithful
Representation, which is made up of 3 categories, which is category 1, complete information. In accounting, we're required to be complete. Don't make up anything. Don't say what you think you want to say. Don't leave out stuff deliberately. Faithful means complete. No lying. No covering up. Okay, folks? What's the next faithful concept? What information? Neutral. What does that mean? Neutral means unbiased. Your personal opinion is irrelevant. You have to report it as you see it, not what the CEO told you better, or somebody pay you off to do, or threaten your life. Oh, threaten your life, maybe. But the point is, you have to, if you're an auditor, you have to be neutral. That's the point. You come in, you cannot be influenced by management. If you're an auditor, neutral means unbiased. Don't let them, quote unquote, sweep you up as an auditor so you can change your position if you find something that is wrong in the firm. That's what neutral means. Okay. And accountants in practice and auditors in practice are expected to be neutral in their decision making, unbiased, fair. Don't take any bribes and lie about stuff in the firm. Happens all the time. All right, what's the third faithful? Representation. Free from? Material error. Okay, in other words, when we're doing all this stuff that we're doing, we have to try to the best of our ability to do it as correctly as possible. And when we say material, we mean an amount that will change the whole perspective of the financial reporting process. If a general ledger is off by $300 and the firm is worth $1 million, is that material? No. Are we going to spend all night trying to find $300 for $1 million firm? No, that's immaterial. So when we talk about a material error, if the error is small enough, we don't worry about it. But if it's significant enough relative to the size of the firm, we say now what? Important or material. And we need to find out what the hell happened. Okay. So that's qualitative concept number 2. And then what is this third thing? Enhancing what? How do we enhance these qualitative characteristics? Well, we're given some other stuff. Again, these are not difficult. And these are the kinds of things that come up and see definitions. What are the 3 qualitative things that we discuss? What do we mean by relevance? Nothing hard. It's only hard if you've never seen it. They say, man, I'm not reading that. Tired reading. I don't know, I'll leave it blank. Some students. All right. So what are these things that fall under enhancing qualitative characteristics? What is the explanation given for that? Right next to it. What do they say? They don't say anything?
What's the question?
What is the explanation given next to enhancing qualitative characteristics? I just want somebody to read that. That's what I mean.
Other qualitative characteristics that the FASB has established for interpreting accounting information include
The following. All right. So in addition to what? Relevance issues and faithfulness issues, we have these what? Other issues to account for and consider as accountants. A lot of little bits and pieces. They're not hard. You just have to get used to them. And eventually over time, you get comfortable with them, like everything else. Okay. So there are 1, 2, 3, 4. What's the first one? Enhanced qualitative. Comparability, which means
Quality that enable users to identify similarities and difference between two sets of financial data.
indeed, in other words, users of financial information should be able to compare them from year to year using the same principles. That's why if you look at balance sheets, income statements, and other reports, they have the same structure, what? Year after year after year. We don't keep changing stuff. So that persons can compare apples with apples. Okay, so if cash is the first thing in the balance sheet 1 year, cash will be the first thing in the balance sheet when? The next year, and the year after, and the year after. Okay, comparability. Number 2. Yeah, information have to be verified to be true. Any information you put in financial statement at some point, you should be able to confirm whether it's true or not, provide evidence of the transaction. In other words, we don't just make stuff up and write it down. Okay. 1 or 2 persons try to balance stuff without being sure why they balance something and make it balance. But that's okay. People even do that in real life. But you shouldn't do it. Okay. But if you get desperate in a test, for example, and you just need to make something up to balance, let it rip. Well, not let it rip, but you know, because if you do some stuff to make it balance and the numbers in the balancing side are correct, you'll get credit for that. You just won't get credit for what you did to make it balance. But in practice, we shouldn't force things to balance. We need to find out what the problem is or make an entry to account for the difference that we cannot find. All right, enhance number 3. Timeliness. Information must be timely. The board needs it now, they need it now, not next year. If you want information for the last financial year, don't bring information from a few years before. It has to be timely. And then finally, yeah, even the expression is a long word. But what it really means is information should be written in such a way that users can understand it without too much stress, the average person. Of course, accounting, like so many other professions, we still don't use a lot of understandable language. We still use a lot of mumbo jumbo for the profession. But that's how these things are. However, we should continue to strive for understandability so that the average person who's reading can make sense of a great deal of the information without being confused from start to finish, for sure. And then there are some accounting conventions. Yeah, what do you say? Consistency, very important in accounting. Whatever we do today, we do tomorrow, we do next year, we do 50 years from now, generally speaking. Accountants are required to be consistent. Okay, for sure. On the top of page 173, online, people having fun. Ivania. Sick.
Yes, sir.
Oh, there you are. Okay, needed some time for it to be transmitted. Okay, page 173 on the top, we have something in italics related to consistency in accounting. Can you read that?
Or the nature of and justification for a change in accounting principle and its effects on income should be disclosed in the financial statements of the period in which the change is made. The justification for the change should be explained clearly. Hold on, I read that right. The justification for the change should explain clearly why the newly adopted accounting principle is preferable.
Indeed. Thank you very much. And so in the world of accounting, we are so consistent with what we do from year to year that if you have to make a change in any practice, for example, if you change the way you calculate depreciation for some reason, you have to give a what? Full explanation in the financials so that your readers of the financials will know exactly what change you made and why you made that change. Now, many firms change things like that and principles, they don't tell anybody, they hide it. Until the auditors come in and say, you made some changes in principle, but you didn't put it in your disclosure notes. And then the board would say, since you're our boy, don't tell anyone. And then the auditors will say, I am neutral. See that word? I cannot be anybody's boy. Anybody spell boy? B-U-Y. Oh, B-E? B-E-Y, boy, yeah.
B-U-I.
B-U-I,
Right.
or B-E-I, all of the above. But let me just say this, anywhere you go in the world, if you hear boy, you know who that is, Abba. There's nobody else in the world can say that. Okay? There's another Bahamian expression that nobody else in the world can say. Interested in hearing it?
Oh,
I ain't gonna lie. Tingum. But I ain't gonna lie is a serious one. Anybody knows what I ain't gonna lie means?
Lion.
No? What's the literal meaning? Yeah. Yeah, I'm not lying. I said, I ain't gonna lie. And you have to be a Bahamian to interpret that. Anywhere where you go with that, people will be totally amazed. Like, what language do you speak? And you say English. English? I've never heard Angala in English. They're trying to say it. Yeah, I ain't know. I ain't know. What the sick? All right, dialect is hell. Anybody ever heard Bahamian patois? Sorry, Jamaican patois?
yeah.
That's sick.
No, I don't even understand.
Man, you need to go to preschool to learn that.
Yeah.
Learn the alphabet and start up from there. All right. Say, please speak English. So, man, I don't speak English. Right? Do you understand it in English? You still don't understand it. Okay. So consistency in accounting, whatever rules you use, we stay with them. If you decide to change it, you have to disclose it. If you don't disclose it, you're in violation of full disclosure rules that we saw earlier. Okay. Or full disclosure, not earlier, next. In other words, anything you're doing, tell people the truth. Tell the users the truth. Tell your bankers the truth. Tell the government the truth. That's another word, government. Tell the government the truth, and so on. Because lying to the government is an offense oftentimes, by the way, especially when it comes to taxes and compliance. Okay, serious fines, you can even be imprisoned for lying. Willful blindness. Anybody knows what willful blindness is? Deliberately looking the other way. When I was a young customs officer, they said that's what certain customs officers and other police used to do. Look the other way while shipments come in and disappear or something. That's why I was always broke, because I never knew how to. No, too spooked. So my car was always on E. I was always boring because I was too afraid to be bothered, because I'd always hear my grandparents and my mom. Even if it even for some reason entered my mind because I was in the wrong place, listening to people trying to say it. Okay. By all man, the thought of that nonsense, hell no. And then to make matters worse, look what God gave me. 2 sons with my name. Because you know what happens? If they catch the father doing it, chances are that Wilkinson is a Tifa, them 2 boys he got is a Tifas too. Yeah, even though it may not, even though it's not true. That's how deep that foolishness is. Plus, I didn't like prison. I didn't like hearing it, watching it on TV, hearing prisoners, nothing. I don't care. Don't bring me. The first thing I taught my sons when they started to grow up, if somebody comes to you with something that's too good to be true, start running. Don't even entertain it. If they run you down with it, run faster. Spooky. But some people, but not for everyone. But man, like she says, Jeff, Teddy, Tingham, man. People go to extremes. All right. Conservatism is a very important. Ivania, I want you to read on conservatism. Can you read that paragraph, please? Conservatism. That's another convention in accounting. Consistency, full disclosure, now conservatism.
Make sure she there.
She's already read. She left. Ivy? Man, I think a week after next, I'll be online while you guys are here. I'll be tuning in. Okay, Victoria.
Hi.
Oh, there you are, Victoria. Can you go down to the bottom, 173, and read that little paragraph on conservatism for us? Convention number 3.
Okay. When accountants are certain about the judgment or estimate they must make, they look to the convention of conservatism. This convention holds that when faced with choosing between two equally acceptable procedures or estimates, accountants should choose the one that is least likely to overstate assets and income. One of the most common applications of conservatism is the use of the lower or cost or market method in accounting for inventory. Under this method, if an item's market value is greater than its original cost, the more conservative cost figure is used. If the market value is below the original cost, the more conservative market value is used. The latter situation often occurs in the computer industry. Conservatism.
Thank you very much, Victoria.
Okay.
So what she's saying is, under conservatism, the examples that she gave was example concerning inventory. If the cost of inventory, for example, what you paid for it is $5,000, but the market value is estimated to be $7,000, the accountant will not go for the 7,000 because it's a higher amount. Okay, the accountant will go for what we call the conservative amount or the lower amount, so that the financial statements is not more bloated than it needs to be. Somebody understand? Probably not, because most of us want to go with the what? Higher amount. Okay, that's what makes accounting unique. We don't do that. We go with the more conservative amount, usually the lower of the 2 or the 3 or the 10. Okay. So if you're reporting inventory on your financial statement, under the conservative method, you will use the cost, which is 5,000. Now, if for some reason the cost is 5,000 and the market is 3,000, then you'll still go with the lower, which is 3,000. That's how we go. Similarly, if you buy a building for $3 million, that's the cost of the building to you. That is what you will report on your balance sheet. If an appraiser comes by and say, in my professional opinion, and I haven't had a drink yet, this is my opinion before I've had the drink. Maybe he's already had the drink or gotten a bribe. I'm just being facetious, not. There's some honest appraisers and there's some unethical ones, true? Just like any profession in the world. Some honest bishops and some dishonest bishops, even in church. So there's this thing everywhere. So if you pay $3 million at cost, that's what you record in your balance sheet. If the appraiser says, in his opinion, it's worth $5 million, we don't put the $5 million in the balance sheet. We go with the lower of the two. That's conservatism. Doesn't matter if we like it or not, agree with it or not. Accounting will always go with the lower, more conservative figure. Now, if the company decides to sell this property, what do you think it's gonna sell it for 3 million? No, it's then gonna sell it for the current market value, but we don't record it at current market value. Why? Because current market value keeps what? Changing, and we can't keep changing stuff on our balance sheet and financial statement because we are conservative. Does that make sense, anybody? And even if it doesn't, just accept it as a rule. And there's some more rules coming. Okay. For example, if a nurse is giving a needle, do you think there are any rules governing giving a needle, or you could just stick people anywhere you want? No, there are rules. You have to learn how to give a needle. You can't yup the needle and say any fool could give it. That's true. To some other fool or unassuming person. But yeah, you have to learn how to do that. It has rules connected to it. And so does accounting, like everything else. All right. So please know those conventions and those qualitative issues, because that's where some of your short answer, your definitions might come from. What are these things? Ethical financial reporting, we already said, report correctly. Do not fudge financial statements. Do not cook the books. Do not lie. Do not put information in them that do not exist. Do not make up things helter-skelter just to make things look better. Do not window dress. Sorry? Don't do it. Lose your job. Save your repu and maybe even your freedom. Absolutely. But a lot of people do it to save their job as we speak. And their salaries, and sometimes they're big, fat, juicy, delicious, God-forsaken salaries in their mind. They'll curse God and die to save it. So lying on some financial statements, it'd be easy for them to save their whatever they're trying to say. But ethically speaking, we're not supposed to do that. Okay, we're supposed to be correct in what we're doing, honest in what we're doing. That's what we mean by ethical financial reporting. All right. So those little concepts are not difficult. Just kind of, I don't know how you guys study, but when I'm doing like short answer stuff in the old days, I just like put down my little thing, conservatism. And then put a little note. Conservatism means what? Keeping, don't make changes on a regular basis if you have to make simple notes to help it. And then you use them to study after you've done all your heavy reading. But then again, we all have our own methodologies, whatever works for you. All right. Now, the classified balance sheet, don't let all that mumbo jumbo scare you. Because a lot of this stuff that we're looking at in the classified balance sheet, you already know them. See, that's the other thing from chapter 1, 2, 3, and 4. Like, what is an asset? See that? For the classified balance sheet, we just break it down, an asset now into subcategories called current assets and investments and property, plant, and equipment, and that's all we're doing. And then of course, we have to learn what each one of them is, but they're not hard. And then if you look at the textbook on page 176, it's a nice, clean example of a classified balance sheet showing all of these subcategories with a great explanation on the side as to what each one of them is. Wow, how about that? The only thing you have to do is sit down and commit to looking at it. And therein lies the challenge for students. Okay. Current assets are those assets that are going to be converted to cash usually in 1 year. That's it. I mean, you read the rest, but that's kind of it. You read the details because you're a student and you should be interested and curious at minimum. Who knows what an investment is?
company.
Yeah, what you put into a company or what you put into anything. Okay, so if you invest in a company and buy the shares, that's an asset and you expect to get dividends from those shares. Correct. If you invest, open up a CD for $20,000 in any bank, that's an investment certificate. And you expect to get what? Interest back, even though some of them are hardly paying you anything. The credit union rates are better in some banks now. How did that happen?
Not really.
No?
Central bank was wrong.
Well, central bank is not that kind of bank. Central bank is the government's bank for monitoring other banks. It's a regulator. It's not a commercial bank.
She has their right, the return I get about this be basically nothing for what I earn.
Well, that depends. If you're buying government treasuries, treasury stock and treasury shares and so on, the rate is not going to be significant, but it's going to be what? Guaranteed. Okay. I think up until recent, I don't know if Royal Bank has changed its rates yet. They were something less than 1% for CDs. Okay. Other banks are paying 2%. Some credit unions, you check them out, they're at 3 and 4 and 5% if you're prepared to leave it there for 1, 2, and 3 years. But in many cases, their rates are better now, even in some commercial banks. Interestingly enough. Some food for thought, actually. But these are all investments. Okay. Under investments, there are a list of things given. Do you see that? What's the first example? Say it again. Yeah, securities and long-term investments, followed by long-term notes receivable. Receivable means what? You expected, yeah, money coming in. Even if you don't understand the note, when you see receivables, oh yeah, money coming in. Okay, followed by plant and equipment not used in the business. See, now that's an interesting thing. Because if you use it in the business, it's for generating revenues, therefore it's not an investment. Did you follow that, folks? Any asset that is used in the business is for generating revenue. If it's not used in the business, then it becomes an investment from which you earn what? Investment returns called interest and dividends. As you can see, suddenly accounting is not just about journal entries, debits, and credits. It's about lots of other little interesting things that you can use for your own personal lives, even if you never go on to be accountants anywhere. How about that? As you start to feel discouraged. Don't. Keep on keeping on. All right. Property, plant, and equipment. We have seen examples of that. What does intangible means? Intangible assets. Assets that are what? Intangible. What does that mean?
Long-term asset with no physical substance.
Yeah, long assets with no physical substance, like what examples they gave?
Assets stem from rights or privilege.
Trademarks, like the rat back on Bacardi, that's a trademark.
Yeah.
Copyrights, you make a movie, right, or whatever, write a book, do an article, you have copyrights to that. Nobody can use any part of that without your permission and oftentimes without paying you. If they do, you can sue. These are intangible assets. You can't touch them, but they have value. Okay, folks?
Going back with stocks and things also. Or that.
So are stocks intangible? No, because you get a share certificate when you buy stocks. Okay? The trademark and the copyright, you get a piece of paper, but you know, it's the rights to it. It's the rights to work you've done. It's the rights to a product you've created like that. Okay, for sure. And hence we refer to them as intangible. Because the rights themselves, you cannot touch. The product and creation you might be able to touch, but not the rights themselves. Fascinating concept. Okay. All right, then we have our liabilities broken down into current and long-term liabilities on the balance sheet. And of course, we have our ever favorite owner's equity. Notice On page 178, owner's equity shows up again. What is the meaning of owner's equity, anyone? We're back there again. Remember I told you, keep going back. Don't forget what you've done. What is owner's equity? In what form? Well, what is equity? Forget owners. What is equity? Your investment in the, so owner's equity is really just an addition to say that this is the owner's investment in the company. That's all that means. Okay, still your investment in the company, because in this example, you're the owner of the company. So we call it owner's equity. Now notice we have three categories of equity given to you to introduce you. Previously, you saw owner's equity, which was for an individual account or individual investment, Tom Jones Company, that you did a person for homework. So that was the owner's capital. But we have two other equity accounts, one for partnerships and one for companies or corporations. And if you look at them, and when you look at them, you will see that at the end of the day, they're all equity accounts, but they have different structures. You see that? Even though they have different structures, they're all equity accounts. For the individual owner, it's called what? Owner's capital. Do you see that? Simple. For how much? Okay. And if it's a partnership, what do we call it? That's all. One partner has X amount, the other partner has Y amount. Do you see that? Simple as that. Man, when you start breaking things down and learning them, you start thinking, why was I all uptight about this? This is not as difficult as I thought. Some of it, not everything. Some stuff a little edgy. That's how it's supposed to be. But the idea is everything is edgy until you commit to it. Start learning it, start being interested in it, start seeing what the benefits of it really is. Okay, for sure. All right. And then the third equity, Cameron said, was the corporation. Notice the structure of the corporation equity accounts are quite different from the first two. Is this a fairy tale of magic? No, these things evolve over centuries. And now we have these structures, and that's why they're embedded, because these have already been tested, structured, changed, and proven. So what does the corporation equity account look like? Well, first of all, we don't just call it equity anymore. We call it what? Say it again? Yes, stockholders' equity or shareholders' equity. Why do we call it that? Because they own shares in the firm. That's all, simple, not complicated. So because they own shares in this firm, sometimes in the millions of shares, we say they are owners of shares in the company, and therefore the shares that they own is their equity in the company. So now when you guys go to your dinners and people start talking about the shareholdings as part of the shareholders' equity, you won't be stuck anymore like I need to get out of here. And it's too stifling. You'll be interested now. Like, oh, they think I don't know. Just because I didn't know 5 weeks ago, they think I don't know. I know now. So you just think quietly like James Bond. Then suddenly you start discovering some things that you never would have focused on before because now you have information. Knowledge is hell. You're getting benefits even when you don't realize it. Guaranteed. All right. So the shareholders' equity account, and notice it has a very specific structure, and it's a structure that we just have to learn. There's no magic to it. Usually, for example, if you get an examination or homework question, you'll be given the data, and then you have to set it up as you see it. Just like an artist. See, when an artist is painting something, They're like this, looking at what they're painting. They don't close their eyes like, no, man. They look at what they're painting. Same thing. If you want to prepare shareholders equity, what do? Look at it. Take the information and structure it the way it is here, just like an artist on a board, like that. Turn left, yeah, smile. Mm. So in a way, accountants are like artists. When we're structuring what we do, our statements, our reports. Of course, artists have no rules. We do. Artists do whatever they feel like. All right, so let's take a moment and go back to page 176 and look at the classified balance sheet example. Anybody looked at it before? Oh, yeah. Yeah. So, well, at least you guys don't have to worry about getting your homework until tomorrow. Because where do you think the homework is? Home in my book. It's good, I don't have to carry that on the road with me tonight. I get it, point well taken. But I will email it to you tomorrow because you will need it to practice. For sure. So the beginning tonight until your examination is done on Monday night, your life is not your own. Tell the world, unless it's emergency, fire or children, and very little children, to leave you alone until 1st of November. All right. So if you take a good look at the classified balance sheet, you'll see it's not difficult. If you get a question like this in the test, just take the data and set it up the way it is here. That's all. Assets, current, long-term. Liability, current, long-term. See that? Shareholders' equity. If it's a partnership, you use a partnership equity. If it's a corporation, use a corporation equity. And if it's an individual, use an individual's equity, as we saw on the previous page. Do I need to know everything, get everything right the first? Hell no. Who says you're supposed to get everything right? Man, let me give you a little secret. Typical examinations in the UK of all kinds, accounting, law, whatever. Their passing mark tend to be somewhere around 50, occasionally 60. And here's what gets student with the UK examination. Any fool can get. Don't make no mistake. In a UK examination, if you get 50, you should thank the Lord. Because the examinations are very what? Stringent. Now, I'm not saying that some people don't get 70, 90. You always have your little gang. But the rest of us are around here, like, screw 51. The point I'm making is, don't you strive for perfection, but if you don't get it right away, don't become depressed, lose sleep, curse God and die. Don't do that. Like I've seen students sometimes after their midterm, if they don't get the grade they dreamed about, they start panicking. They start like, why did I even do this? One or two, even you don't see them anymore. And they just leave the investment that they've already made and walk off in a panic. What the hell is that? Why would you do that when you still have exam number one? And you still have HW credit, and you still have being in class and being in this. Why would you give up before it's over? Nothing is over until the Cameron. Doggone it. He knows a little crap for a youngster, doesn't he? Where'd you learn all this crap, Cameron? You in this class? Yeah. He's sharp. Absolutely. So he's in here. He's not only learning about debits and credits. By the time he leaves this flicking class, he's gonna have all kinds of stuff going on. Say, Cameron, no, listen. Don't worry. I have a secret weapon. His name starts with W. And I'm not telling you because it's my secret. You guys want to find out? Sign up. Way to go, Cameron. That's what it's all about. Any crop you can learn from anywhere that's going to be of benefit, you should. All right. So, is there anything in this classified balance sheet that looks spooky to anybody? The whole thing? Oh. What is the name of the equity account in this balance sheet? Classified balance sheet. What is it called? The equity account. What's the heading of the equity account in the balance sheet? Owner's equity. So which of the three that we looked at is this? Yeah, the sole proprietorship, the individual, which suggests that this business is owned by one person. If it said partnership equity, then we know that this balance sheet is a what? Partnership balance sheet. See my point, folks? And if it said what? Shareholders equity, then you know this balance sheet relates to a of course, a corporation, company. I tell you, as stressful as it might be, and as far out as you might feel sometimes in trying to get all these things together, there are a lot of things going down that's going into your brain that would be of great benefit. I guarantee it's somewhere in the unknown future. All right. So the classified balance sheet is no big sweat. Don't sweat it. Do an example of it for practice and move on. Because you already know what a basic balance sheet looks like. All you're doing is breaking it down into what? Subcategories. And you just, when you're looking at the example, you just look at what the subcategories are. What falls under current assets? What falls under long-term assets? What falls under current liabilities? What falls under long-term liabilities? And then if you get a question, an exam or an homework, you just follow your instincts with what you reviewed. Whatever you do, just don't leave anything blank. Make up something. You might get lucky. Okay, for sure. All right. The only other thing that I want you to commit yourself to, other than the reading of the chapter, are a couple of ratios. Okay, and I'm not going to bog you down in ratios at this stage. Those of you who move into accounting too will see ratios again. I just want you to be familiar with the basic calculations of some of the more popular accounting ratios. Okay. For example, before we get to the ratios, there is a statement on page 180 under evaluation of liquidity. Does everybody see that? Evaluation of liquidity. What is liquidity? Cash. Yes. If you're liquid, that means you have what? Cash. If you are illiquid, yeah, you broke. Well, you may not be broke, but you said you don't have cash. A lot of people have other assets, but they don't have money. I mean, they don't have cash. They have property in Abaco or somewhere. The only problem is if you get a flat tire or you need to repair the radiator, will the property in Abaco help you? No, dog eat your lunch. You'll be on a jitney waiting to sell it, to convert it to cash, see? So you could have some liquidity. Nothing wrong with the property in Abaco anywhere. But just make sure that somewhere along the way, there's some liquidity, some cash hanging around just in case. Especially if you have children. That's sick. Do you have any kids yet, Cameron? You say I'm only 20. Don't mess with that. Good. Because children are nothing to play with. Don't mess with that until you're ready to be a full-time. Absolutely. Okay. I'm telling you now, I don't care what Shakira tells you. And don't let Shakira outsmart you either. Yeah, I on the pill, Cameron. I swear. God don't tell me go on the pill too. because she goes to church too. Next thing, this Cameron, you sure? I swear, Cameron. You think I'll do that to you, Cameron? And that's it. When he comes back after the exam, I'm a dad now. Okay, but yeah, keep it that way until you're ready to mess with that. For your sake and for the sake of your children. Okay, for sure. Okay. A lot of us play around with children. If this is a game, it's not. All right, so liquidity means having cash available. One of the important aspects of liquidity is something we call working capital. Simple formula, what is it? Simple. Current assets equals simple. And so in this example, how much are your current assets? And current liabilities? So your working capital is? Which means that in this example, your assets are greater than your? Is that good or bad? Damn good. You always want your assets to be greater than your liabilities. You don't want your liabilities to be anywhere near your total assets. Otherwise, you're going to end up eventually with zero net worth. Nothing wrong with having some debt, but you don't want to be too wrapped up in debt. You only want enough debt to get you do what you need to do, like a mortgage debt, car payment debt, school fee debt. Those are important debts, but no tour to the promised land debt, cruise to the Greek islands debt with my friends them. I said, we still do it, but. And we have a reason too. It says, why you did that, Jennifer? Man, if I didn't get in debt for that, I'd never see them places. And everybody in the world seeing them except me. I'll borrow if it kills me. And so we borrow. And I guess to some extent that's okay if you can deal with it. Okay? If you have the liquidity to do it, see, the liquidity to do it. But when it comes to debt, we have to be very careful. Because debt will come back to smack us in the face. Especially if you lose something called a J-O. It's my foot. All right. So the working capital ratio, if I ask you that next week, nobody should get it wrong. It's too simple. Where did we get the numbers from? Which one? The classified balance sheet. Yes, you're right. I just wanted you to say classified. Okay. All right. Then we have the current ratio. What is that? What's the formula for current ratio? Oh, does everybody see that? Current assets divided by current liabilities. Does everybody see our ratio yet?
Yes.
Okay. Current assets divided by current liabilities. In this example, current assets equal? Four, 467, 424 divided by current liabilities. Sorry?
170,000.
170,000. 732 equals 2.74. What this means is that our current assets in the company, like cash, receivables, inventory, whatever they are, is almost 3 times the amount of our current liabilities. Good or bad? Damn good. Because that means that you have the ability from here to pay this in installments or in full. Does everybody see that? Okay, let me bring it home then. Let's say somebody in this class has a loan at 5 banks in the Bahamas, one at each bank. Okay? So that would be your liabilities. Let's say your loans total $150,000. So that's your liabilities. Not necessarily current, I'm just using it as an example. And then your assets, well, you only have one old car from 1970 and a couple of others, so your assets only total 70,000. I don't know how that happened. Your friend must have given you that, but that's your debt. What's your ratio? Assets, liabilities. What's your ratio? By the way, you need a calculator for next week, for sure. 0.47, which is less than 1. Which means what? That your debts are significantly greater than your assets. So you are now at what we call negative net worth. Even though you own these, because your debts are more, you own nothing. As a matter of fact, if you lose your job and the bank sees all your assets and sell them for 70,000, so you take off 70,000, you still owe how much? Huh? 80,000. See that? So be careful with that. It's okay if you use it properly and according to your ability to repay. If you don't, it oftentimes comes back to create a nightmare. So 2 simple ratios: working capital, current ratio. Okay. Current ratio always wants it to be greater than 1. Greater than 1 means that your assets are greater than your liabilities, so you can pay your way. You have the liquidity to pay your bills. If liabilities are greater than assets, current or long-term, then you lose your ability to pay your bills because you owe more than you have. Some people still wing it and get by with it as long as they can continue to keep their jobs and or negotiate some stuff. But in pure terms, it's a very dangerous position to be in. You always want your assets to be greater. That's why when they're talking about celebrities, they talk about celebrities what? Net worth. Okay, net. So what they do is they take the total assets of the celebrity, 1 billion, how many zeros in billion? Yeah. And then they take away their debts. These are the assets, and they whatever debts they have. Let's say $500 million. So the net worth is what? $500 million. You're not really worth $1 million as long as you have $500 million as long as you have $500 million in debt. You're only worth $1 billion when you paid off the debt. Does everybody see that? Until then, as long as you have debt, you're worth what you own minus what you owe, what you owe. That's interesting. Even if you never even pass an accounting class, that's an important thing to know for your own lives. That's what's crazy. Because a lot of people suffer from the same thing. Every single day, regular working class people. They're suffering from it, they're not really sure what they're suffering from. Because they don't understand what the issues are. They only understand that somebody tell them they over borrow, and they don't understand anything else you say. Over borrow. I have no idea how to spell that. Good luck. All right. So these are your liquidity ratios, working capital and current ratio. Then we have our profitability ratios. How many of them are in your text? Page 181. Profitability ratios, how many? 3? 5. 3 or 5? 5. Where do you see the 5? Yeah, bottom of page 181. What's the first one? Profit margin ratio. And what is the formula? Net income divided by revenue. Where do we get the net income figure from? Income statement. Where do we get the revenue figure from? Okay, which is why we spend a lot of time understanding what's in those statements, because now all of a sudden you needed to do ratios. Remember I told you in accounting, everything builds on the thing before. Did I say that? And when we do the math, when we divide one by the other, what do we get? For profit margin, when we divide net income by revenue, what do we get? 5.7%. And we are told just under that exhibit, what does that 5.7% mean? Does anybody see it? When you do that calculation, you get 5.7%. You're a business owner. What does that mean to you? For most business owners, small business especially, they don't care. They don't understand it. They don't hear anything about it. But really, what does it mean? It's in that little paragraph right underneath the exhibit. Just above asset turnover, what does it say?
That's on each dollar of revenue.
Go ahead.
Monali makes 5.7 cents.
On each dollar, he makes net profit or earns 5.7 cents. Okay, that's really what the ratio means. So every time he sells something, he makes 5 cents on it. Why? Because before he can make anything back in profits, he has to pay what? Expenses. And so after expenses, the ratio tells us that he makes 5 cents on the dollar. Is that good or bad? Generally good, depending on the industry you're in. 5 cents on the dollar is a big deal because most of your bills, most of your revenue goes to pay what? The cost of generating it, which you call expenses. So if you can come up with 5 or 10 cents on the dollar, 5, 10 cent return, 10 return, that's a great return, better than most banks. Okay, absolutely. Thank you very much. 5 cents on the dollar. So when you walk around, somebody says, man, I only made 2 cents on the dollar. Now you know what they mean. Okay, and now you see how it's calculated. We take the net income and we divide it by total revenue, 5 cents on the dollar. All right. Then we have the second ratio, asset turnover. What's the formula? Revenue over asset, average total assets. What's the formula for average total assets? Do they tell you? Interesting. The denominator asset turnover. You notice there are two numbers, one number plus the other number. Where do you think those numbers came from? Total assets? Which one is the total assets? The first or second one? Is that the first or second number? Okay, and the second number is what? That's after the plus sign. What amount is that? Yeah, you can't seem to find it. Let's look at the little box, the little paragraph that we saw earlier right under the exhibit. What does it say? Thus, this, what does it say? Is that right under the exhibit? Asset turnover. Keep going. What else does it say?
Companies more productive, producing revenue than other companies
Interesting. But we still don't know how we came up with those two numbers at the bottom. Just, where do you, the one came from where? Okay, under which category of assets? And the total assets? Does it, what are the total assets for the classified balance sheet? That's the first one. Yeah, so you're right. It came from the big, yeah, what about the second number? Where do you think that came from? Because they didn't come outright and tell you. Well, the total assets that you see in your balance sheet is what we call the beginning balance. Because that's what balance sheets give you. End of the year is the beginning of the what? New year. So that's the beginning balance. What do you think the other number is? Ending, yeah. So you have the beginning balance plus the ending balance divided by. But you'll see that a little bit later. Okay?
Right now.
What I'm saying is, the reason why I'm telling you that, if I bother to ask you to do this ratio, that's all I need you to do. Take the beginning and the ending, which I'll give you, and divide it by 2. That's, yeah, he wrote that down. So I used to do, like, write little stuff down just in case. So that later on, when I look at it like tomorrow evening, I have to figure out, like, what the hell again was that? Now I have my little note. Take the beginning plus thing and divide by 2. That's all I need you to do if I ask you for that ratio. Okay, and what goes on the top? Revenue. Okay, that's it. What about the other one? Return on asset. What's that formula? Net income divided by average total assets, which is what I just gave you here. Is there a single number or 2 numbers? Like a first number plus a second number, correct? So average means what? From high school time, average means dividing by 2. Or and the number of numbers in the calculation. So if you have the beginning and ending, there are only 2 numbers, so we divide by 2, average. If you have 5 numbers, you divide by 5. But for you guys, you're only gonna have the beginning and the ending. And so the average will always be divide by 2. So that confirms the position in terms of calculating the denominator for both of those ratios. Just use the average, and the beginning and ending amounts will be given to you. You will not have to figure them out. Okay. Just make a note, use average. And you cannot go wrong. I'm not asking you at this stage to come up with all the interpretive messages. All I want you to be able to do is the actual formula. Okay. So that you can get your hands wet. And the final formula you need to know potentially is on page 185, called the debt to equity ratio. Everybody see that? What's the formula for debt to equity ratio? Total liabilities over total equity. In other words, the more liability you have, the less equity you will end up with at the end of the day. Remember, equity is what you what? Own. Liability is what you owe. So you always want to keep what you owe as low as possible, correct? So you can keep what you own as high as possible. And so this formula is designed to show you what percentage of your equity is debt. Because the higher your debt ratio gets, the less equity you're going to end up with. A lot of people still don't understand it until you put it this way. If you have equity or you own $100,000 and you have debts of 95,000, what's your ratio? Debt to equity. 95,000 by 100,000, how much is that? What ratio is that? 95%. Does anybody know what that 95% means in the real world? The real stinky world? That what? 95% of your equity or what you own is not yours. That's what that means. So even though you may be riding around $100,000 Mercedes, if you owe 95,000, how much of that you own? $5,000 of it. The other 95 is owned by who? Bank of the Bahamas, Royal, Fidelity, whoever loaned you the money. Does everybody get that? So in the case of this company then, what is the total debt? It's in the middle of page 185. What's the total debt? Sorry, dollar amount. Right in the exhibit, like all the others. There's no dollar value for total debt? Nobody's seen the ratio yet for debt to equity? It's down in the middle of page 185. Yeah, total liabilities over total equity. Did you get a dollar amount? What's the total liabilities? 200, that's really what I meant, 41,000. Where did that come from? The classified balance sheet. Okay. May not always come from the classified balance sheet, it may just be given to you and say, calculate the ratio. Okay, so your total liability is 241,000. What is your total equity? 393. 732. Therefore, your ratio is debt to equity? 61.4%. Yeah, 61.4%. Anybody can tell me now, based on that discussion over there, what this means for the company?
The equity is higher than what you owe.
It is, but what's the danger with this ratio? Because you owe this and you own this, it means what you owe is 61% of what you own. Is that good or bad? Bad, thank you. She saw that right away. That's bad. You usually want what you owe to be somewhere around 40% or less than what you own, if possible. Under 50%. But when you start getting to 60%, individually, company, or country, you're moving now into dangerous territory. Where if you don't be careful, like the example we have over here, you keep borrowing as a company or individual, soon your debts will be almost equal to what you own, which means eventually you'll own practically nothing. You'll have possession of it, but it will not be yours. Spooky. Nothing wrong with that, as long as you can control it and maintain it, and you don't over borrow. Okay, a mortgage is an investment. So when you borrow get a mortgage, your property is expected to what? Appreciate while you pay down the mortgage. So even if you run into difficult times in your life halfway through your mortgage, 15 years later, you can say, man, we had a ball in this house, right? We had a ball like that. And then do what with it? Sell and run off with your equity. Of course, that's what investments are all about. But if you keep borrowing against that house, and soon the debt against the house is like 80 or 90%, then even if you sell the house, you're gonna run off with practically nothing.
Mr. Wilkinson,
Hi,
my internet had gone down a minute. When you're
yes,
talking about divided by 2, just before we went on to total liabilities over total equity, what was the first one?
hang on. If I believe I get you correctly, I
Uh-huh.
think we were looking at the return on assets, where we had 2 numbers, beginning assets and ending assets. And we
What
say,
page was that?
oh, that's on page 184 in the
Okay,
exhibit.
all right. Okay, thank you.
Yeah, so good question. So those two numbers in that particular example would be beginning assets and ending
Uh-huh.
assets. And the average would of course be divided by 2.
2.
Yes,
All right, thank you.
no problem. All right, so that's where I'm gonna stop on that. For purposes of your examination next week, I just need you to be able to calculate the ratios. And the reason for that is just so, I just want to see that you have the ability to go either to the classified balance sheet and pull out the numbers to do the ratios, or if I give you the numbers, you can just take them and do the calculations. Okay? We've already had our discussions on what they generally mean. And so I'm not going to burden you with particularly with what they mean, because you already have an idea of what they mean, especially this one, I hope, debt to equity, debt to equity. All right, it plagues a lot of people, okay, as we speak. All right, and so if you're familiar with just kind of setting them up and doing the calculations, that would be good. Okay, for everybody, please, I will send you your homework between now and tomorrow. If you don't see it by tomorrow evening, start sending me emails. Like, where is the bloody homework? If worse comes to worse, pick a classified balance sheet, pick some ratios and so on and start working. But I will definitely send the designated questions so that you can use those for practice as well. Please remember, while you are studying, if you get stuck, please raise a question, send me an email, whatever you need to do, don't be stuck. So that come Monday, you can be ready. I'm not going to give you a test that should be so out of this world. If you were at class, if you read anything at all, if you did homework and all that stuff, you have a great chance of getting the grade you want to get. Okay, and remember, this is only the first test. It's not the end of the world, but you know, head for the stars. Okay. All right, if there are no other questions, please have a great and safe week. I'll see you on Monday, examination time. Please don't be stuck. Send me an email if you get stuck on something, get it clarified, so come test time, you'll be ready to go. All right, good luck.
Mr. Wilkinson,
Hi,
Miss Victoria, don't forget when I send you my email on my homework, you will see Charlene come up, okay?
that's a good point, because when I saw it the first time, I'm like, really, Charlene, who's that? That sounds like one of my students. And then I saw the clarification. So Charlene is your third or fifth name?
Charlene is my second name, Victoria is my first.
Victoria is your first. Okay,
Yeah,
I'll certainly keep that in mind.
all right, thank
so
you. I
much.
sent my homework in already though.
Excellent, excellent. I'll make a note of that.
Okay,
All right,
thanks.
so good luck, you guys, and work hard. On it. Propane.
Thank you, Mr. Wilkinson. Good
You're
night.
quite welcome. You guys take care.
Okay.
Good night.
Good night, good night. Question for the class. What does this mean? When you say newspaper like this, what do you see? A newspaper that has not been read yet. Now, how the hell I could be so busy that I haven't had a chance to what? The newspaper. That means I'm too You guys are not supposed to have time to read papers. I should be, I'm like this. Doggone it. Mr. Mackey, you don't sound you're gonna get any homework done tonight.
No, it won't be. Had a rough weekend.
Yes.
Traveled on weekend.
Oh, don't travel until school is finished. Traveling will do you in every single time. So yeah, I get that. Or what you can do, go home, sleep for 6 hours and get up at 3. Yeah, that's the key. You'll be refreshed, you'll be rested, and you would be happy to do what you need to do. All right,
Work for custom, they aren't gonna be rough now.
thank you.
I mean, I close the constant. How you say close them?
That's fine, that's fine. But you understand, okay, excellent,
was surprised I got that on my shirt.
excellent. Once you get it ultimately. Good night, take care. Let's see.
Do you remember? But sometimes I use both. I don't know the red on
Crystal Moss, let's see.
No, I mean on the regular.
Oh, my schedule?
Yeah.
I think,
And people tell me later, as long as you say crystal, you know.
I'll know that's you.
I use moss and vessel sometimes.
Okay, so you use them interchangeably. You don't say like Moss Bethel.
Sometimes I say moss vessel. What happened is all of my identifications ain't changed to my married name, so it's all over the place sometimes.
So Crystal Moss, Bethel, Bethel Moss. When are you going to make the change?
I'm trying to, my passport and
Tonight, take care.
my passport and license. just
How
says
long has
Crystal
it been
Moss.
like that, Crystal?
Maybe a year or two.
You are kidding me.
I'm telling you.
You need to get it together, Crystal Moss.
I know
Whatever.
that to do the passport, it's gonna be.
I know. No pain?
Okay. Yeah,
Because you don't want to wait until something happens and then you
it's
have a
all over
bunch.
the place, yeah. I
Yeah, you
know.
have
And that is
confusion.
already all over the place because 1 minute, my husband's family told me it was 2 L's. Then they told me to drop it to 1 L, so it's like we all over the
Birth
place.
certificate.
But my husband doesn't have a birth certificate, his mother never registered him. So he had to get like an affidavit, and then that was a long process.
Did he get it?
Not as yet.
Oh my God.
So,
Yeah.
so
He
some
need-
persons in the family have 2 L's, some have 1 L.
You need to get, because if something happens to
Okay,
him,
it's
some lawyer is gonna come in with some egg and confuse things, especially if, see, assets are involved.
Mhm.
And so, well, quite frankly, it couldn't be this Bethel because, see, and they confuse whatever the name is.
Yeah, it's hectic. I should have just left this Crystal Moss and then water with the Bethel. 'Cause
Well-
it's from, it's being.
His name is Bethel?
His name is Bethel, and my kid's name is Bethel.
So you
But
need to get that 2L,
a
1L
mix-up.
thing together.
My birth certificate already have, not birth certificate, my kids' birth certificate has 1 L. My marriage certificate has 1 L. His family has 2 L's.
But he's willing to get an affidavit.
Yeah,
So if he's
it's a
getting-
long, it's a
I
rolling
know,
process,
I
because they
know.
couldn't find nothing.
Oh my
So we have to
God.
go this place, then bring it back to this place and go back to that
Right.
place to see.
So which one is he gonna go with, 2Ls or 1L?
Well, 1 L because my kids.
Otherwise, you'll have to change all of them.
Yeah, it'll be. I
Yeah,
don't
so
want-
tell him when he gets it together, 1L. So
Yeah.
it's consistent with the
But-
children's documentation. And then whatever you do will be 1L.
But then I mean, it doesn't matter, I guess, but his family has 2 L's. And apparently it matters because the 2 L's are the higher. The 1 L is the lower, and I'm like, how I get
Really?
this? How I got this? Like
enough.
lower class.
Really? That's an
Yeah.
unholy mess.
That's,
Okay?
I was like.
And
what is
then
this?
if they want, if they have to leave if he goes with 1L and they have to leave something in a will,
Mhm,
they're gonna have to make it clear that I'm leaving it to my son, Rodney James Bethel with 1L.
mhm.
And see, it could get
It
really
is
weird,
just- It is weird right now.
okay?
I should have just left Crystal Moss and just. Because a lot of my documents is Crystal Moss.
Right.
So,
So, yeah, that's something you need to look at for the
Yeah.
new year.
yeah.
Because if something happens to whatever.
It'll be a big mix up.
Yeah.
I know.
Absolutely, absolutely.
All right, thank
Okay,
you.
take care.
All right.
Bye-bye. Hey. Well, I just finished, so I'm going to see what's kicking. I wonder, I don't want to take a chance with that car though. Not tonight. I'm gonna go and see if I can pick up, all right, can we get a can I get a taxi down here at night? Let me see, let me get back to you. Let me see if I could blah, 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 and I'll call you back. Okay? Hello, is this Jermaine? Pretty good, pretty good. This is one of your persons you picked up some time back. You left me your number. You happen to be anywhere near the hospital? PMH. You know where the museum is on the corner? Right on the corner by the hospital. Okay, you know what Graham Thompson building is? No, not doctors, PMH. Yeah, you know Graham Thompson, the yellow building, right here on the corner by PMH. Yeah, I'm right there. Out east. Yeah, Elizabeth and Shirley Street. Right with the yellow building. Sorry? Where is it? What I got? I guess down by Culbert's Hill. You know where Wendy's is? Yeah, Prince Charles. Okay, I'm gonna step downstairs. Thank you. How much? Okay.
I believe, I believe, I believe, I believe. You are the son of my salvation.